Morning, traders. Welcome to the Traders Lab today. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab chat? Thank you, Marty. How are we doing in YouTube? You guys able to hear me okay and see the screen? Yeah, thanks, Stephen. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B., streaming live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream is about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis. In addition, this Trader Lab is about a community of like-minded traders who have come together to leverage their collective experience. The idea of the Trader Lab is to help traders understand the business of trading and to use structured trades to build out a template or process that they can vet. The idea of vetting is to know that whenever you interact in the market that you have a statistical edge. And while the outcome of any individual trade or interaction with the other participants is random, if you have an edge, the same way that the casinos do, and you can execute that edge, which means managing the emotional and psychological impediments to stepping in front of risk, you have the same opportunities as casinos do using their business model to, over time, execute that edge in order to extract dollars from the other participants, as they are called in casinos, gamblers. So what is the difference between a gambler and someone in the business of trading? It is all about statistics and accepting the random outcome. Now, psychologically, as mere humans or mortals, we have a problem with pain. We have a problem with ego. We have a problem with emotional stimulus or chemicals that are released in the brain, the fight or flight mechanism. That is constantly pushing against our desire to execute, assuming we've even done the work to have an edge. It also is an obstacle to us just waiting for those edges to show up. And we start impulsing, and all that behavior is all created by chemicals in the brain. So if you can understand the mental aspect of trading, you might have a better opportunity to manage it. And what's another way to manage the randomness and the chemicals that are created operating in an environment of randomness? That is statistics. So this is what the Trader Lab is built on. Traders coming together, 60 PDFs of structured trades you can download, so you can select just one, and you come to Trader Lab community, and they can help you select a primer or primary structured trade that you can reverse engineer and make into your own. The thing about Trader Lab is we are all different. And what you're going to find is there isn't one way to trade. Now, one way to trade is about range or fractal or time frame. The process of the market is generic. In other words, swing trading, position trading, scalping. And the whole thing about all of that is it is fractally oriented. So it happens at all time frames as you guys think about them. But think about a process. If you were to put all these different charts together, 1 minute, 2 minute tick charts, range charts, all this kind of stuff, and you took all the numbers out of them, they'd all look pretty much the same. What that tells us is the market's behavior is generic, and I always refer to them as Russian dolls. Higher time frame, and then what's inside is the fractals, or as you guys think, time frame's going down. That's the basis of Trader Lab, and all the resources are available to all of you who are visiting in YouTube. There's no cost. That includes structured trades, which are in the 60 PDFs you can, when you visit Trader Lab using the link in the bottom of YouTube, you can download. Also, the community, and we have traders there that are newer to other traders that, as we say, have a little, are gray around the muzzle, including myself, and funded traders, independent traders, all kinds. Everybody. So it's a great community, and bring your experience, because the idea of TraderLab is to leverage the collective experience. And don't forget, there's a library of webinars that are exclusive, as well as chats and pre-market inputs. You might say, I'm going to show you some of that today, so you can kind of get a sense of what the TraderLab might be about, and maybe it'll help you on your journey. And once again, thanks again for visiting the TraderLab, and I'd appreciate a thumb up in YouTube if you find what we do here today or any other day interesting and helpful. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only, but if we do get into real time, one never knows what might show up. Now, as another thing that is available to those of you, and I would remind newer TraderLab participants, be sure to download these statistics, since the business of trading might be, if you accept this, a game of probabilities, if you will, and acting like a casino. It's all about probabilities. So statistics are part of what we do in TraderLab. And part of that is because if we are in a random environment, well, you know, how do you aim the barge? You know, how do you aim the boat? Now, I'm going to give you something. I'm going to show you a couple little things right here, and this might be a little strange. This is the Bookmap Discord TraderLab chat. I'm going to try to blow this up right now without blowing up. Okay, and you can see now, the market in the ETH was in balance. 55.20 is the breakout in previous consolidation, potential to test. Okay, so that's our downside target. And if you look at the low of the day, I think it was 19. And here's the other part. In the ETH, we are in balance. Balance means two-sided trade. Now, I'll show you these as soon as I get in, but I want you to see this. Now, at 8:15 a.m., look at the ETH profile and the location of the mid, VWAP, and VPOC. That is called balance. Now, what is balance? And one of the things that's really difficult for traders, all of us, by the way, is to understand what's called context. In fact, I got a question about this from Alan, and I get this question all the time. It was very hard for me. Context is the current condition of the market. And what is really difficult for retail traders is to know there's a difference between a market that's moving or directional and the market that's range bound or consolidating. And that is typically seen as balance. And what balance is, and you can recognize balance when you have the mid, VWAP, and VPOC pretty much aligned with each other. And then what happens is you get what's called mean reversion trading or outside in trading. So this is basically look at the bracketing both sides of the overnight volume point of control. Overnight volume point of control is the highest volume in the ETH. Think of it like retail. And if the highest volume is where buyers and sellers interact, when you get to outside edges or a price that's too high, we will revert back. And then if we get too low, we will revert back. So that's pretty much how that works. So, and we have a single print above at 58 from yesterday. We may get back there at some point or never. And I have this. It's selling first and potential short squeeze. Range unknown. Might stay two-sided, but stats in play. The stats favored the upside. Lovely, huh? Now, let me bring you to something I just posted so we could have it here in the stream. And see all these posts? This is what's going on in TraderLab. Charts are being posted, all kinds of great stuff. If you're not getting this kind of information and interaction, you might be missing something. In fact, you're missing a lot. And that's what TraderLab is about. The community of TraderLab. I don't think I've ever showed this before, but I want you to see it. Now here, let's see if we could do this. again, without doing damage. This might be damage. I don't know. And I can't see your questions. This is a higher time frame. Alan, remember you were asking me? What these are this is a consolidation, okay? And when we broke out on the trend day last week, or actually maybe it was beginning of this week, or maybe Monday. Yes, Monday. The 45.1950 was the breakout. Markets have a tendency to come back and test previous consolidations, right? That's where this level came from for today. And this is today so far, or it was when I printed this out, which is a little while ago. And this is the low of the day. How would we know that? Now, we don't know it will be the low of the day, but if we understand how the markets work, and this is what the TraderLab is about, it's helping you understand market mechanics, how the market works, why it does what it does, and how, underlined, you might get in alignment with it. So what does that give us for today? Outside edge, and this is a volume profile. What it's showing us is in these 4 RTH days, trend day up, new high, remember, and then sell off yesterday. Why would we sell off? Why? Sell stops under this low. What did we do yesterday? Pillage and plunder. What do we do today? More pillage and plunder. What does this do? Now write this down, guys. Oh, by the way, I got to show you this. If you guys have followed the stream know, this was our long for the trend day up. This was the highest volume price. Think shopping for this day. This was a long. We bought just about off the low of the day on this day up. That was a really nice day for TraderLab participants. Then in here, it became two-sided. Take out this high, two-sided. Then we had the gap in the ETH yesterday, if you remember. We were up 20 points higher, and I thought we would continue after this day. And we were continued in the ETH, but then we sold off. So that set this thing up. And then today, what do? Down here. You can kind of see the logic, can't you? This is the auction. So now what? If this is too low, where might we come back? There. 44.25. And if we get through here, who knows? And it is Friday, so one never knows. 54.50, not a recommendation. Higher time frame. I hope this makes sense, and I hope you're getting something out of this. Now I'm going to try to close this, and if I disconnect from Discord, so you know, I will do my best to get back. Hope you're getting something out of this, guys. And again, this is TraderLab. This is the education. And remember, there's no cost. And I think that's pretty cool. And as long as Bookmap is offering this community, and plus a lot of additional education, you know, if you use Bookmap, there is mentoring and coaching in the Bookmap Academy. All of that is part of Bookmap. There's also additional education besides a high-tier tool like Bookmap, which I've been using since 2015. There's other education, stocks, large cap, small cap stocks, crypto, of course, order flow, algorithmic behavior, market maker behavior, and a lot more. So let's take a look at this. Now, remember, the market's in balance. Let me give you some statistics. Overnight volume point of control. This is the retail price from the ETH. Overnight mid, and let me give you, I know I wasn't going to do it, but I have to do it. We're opening lower inside of yesterday's range. So here's some statistics. Write these down. To get here, some point during the RTH session, and remember, this is the joy, we don't know, 83% probability. So to get to the overnight mid, 83% probability. To get to the previous settle, 72% probability. To get to the previous point of control, 70% probability. These are our primary targets so far for today, and then there's what we call the Hail Mary pass, which would be all the way up to that higher level, which I'm not going to go back to it yet. So these are primary elements for today. And then we have also, remember, yesterday's low and what's our target below? This. That was that test of that breakout, that consolidation. And by the way, this stream's available exclusively to Bookmap Discord TraderLab chat participants to review, screenshot, reverse engineer, and use it to take a look at what you do. Now, what I do is based on structured trades. And my job here in the stream is to show you structure, not to razzle-dazzle you. I can't do it. I've never razzle-dazzled myself. There are days where you think everything is wonderful, and there's other days where you're not in alignment or your plan is not in alignment for a while. And then it's risk management and all that. This is part of randomness. So let's go take a look at the opening trade. So the market is in balance. So there's a couple possibilities. Come back here, check the balance here, or go down. Plus, we had reports this morning. Now, I don't know. It's part of the joy. I don't know. So here's what I see. Now, the market's selling down in ETH. So I'm seeing selling. So there's a couple possibilities. We open, we counter rotate up, squeeze some of these guys out, and come back here, the retail price. So I'm looking at that saying, well, that's a possibility because that has a high probability. Okay. Now, for me, anyway, we'll go into right now I'm only on longs, I'm just saying. Or mean reversion. You got choices here, but that's neither here nor there. We'll come back to that. So we open. This is called developing volume point of control. Now, right here, I'm seeing liquidity. I see a buyer. Let me show you this. Now, this is the opening trade. It's a very aggressive trade. And I always remind everybody, this is not for faint of heart, and this is not for newbies. If you're a novice developing trader, you have to vet this. This is advanced because of speed. I mean, here, this behavior, the sell is setting up, and it's not even, 13 seconds maybe? Yeah, 14, 15 seconds. This takes unconscious competence to deal with. It sets up a short. I didn't take it. I can't react that. I mean, I try, but if the market's here and moving away from me, I don't chase it. I just wait for the next bus. There's a lot of buses here. So this is a short, and I did not get it because I would be entering here and my stop would be out here. So not so much. Just saying. So now this is called the variable high volume node, HVN. And what it is a change in pricing. The auction is very much a shopping experience. And what the market, I see we're heading towards our next target, which is up around 44-ish. And if we get through there, higher, but 44. And those are based on the statistics I already gave you. That's about what was it? I got to just say it again, because we're coming to it about a 70% probability past performance, not indicative of future results. Anyway, so short, no way. Too high. Watch. So too high comes down. So the way to think about this is if we go down first, it sets up a squeeze. So I'm looking for down, and I'd like to see it really go down, take out yesterday's low to get more shorts in here to create the fuel, and that's our plan for today. The idea today is to get long, but we might have to get short to get long. This is part of the joy. So, and we have the overnight volume point of control. So I have this as a target, and I have down below. So, and remember, the market's two-sided trade. So I don't know. I can look at this and I go, I don't know. This is a long. Now, this might not be your long. And here's why. This is too high. Overnight volume point of control. Write down the statistics. All this is TraderLab and how you might figure out what might happen. The issue becomes structured trades and setups. and understanding market mechanics. 83% probability we're going to get right there where that yellow is. That's the overnight volume point of control. So this is too high. Now, right here, when this shifts down, I'm looking for it to continue. Then, so here's what happens. Pulls back to mid and VWAP. Now, you have a choice. If you short, and this could be a short, but this is the obstacle. Now, I look at this, and this is a structured trade in the TraderLab that is not qualified. The thing to understand about the auction is the auction, or the way it operates, does not care about risk reward. We do. So you might have a structured trade, which is what this is, from here to here. But if it doesn't qualify, you can't take it unless you're a gambler. But I'm not into gambling. You know, we all take stops, even when you're following a trade plan that's vetted. Well, why would I put risk on here? Because I can't enter here. If I'm my best day, I might enter maybe here. You know, who knows, right? Because I want to see the failure. Here's my sellers. I got my buyers here. I pull back. I've got no buyer here. Here's my volume. Here's my break. I personally would not, I can't sell this. I don't put an order in because it could just as well come here. What does it do? Hits this, hits this. What is this? Support. No range. Does that make sense, everybody? Malik, is the screen still on Discord? I don't think it is it? It is, Peter. Is my screen, you're seeing Discord and YouTube? Oh, you're not. Oh, thanks, Stephen. Woo. Nothing would surprise me, but so this is a short. This is too low. So this does not qualify. Where is resistance? Here. So watch this. So if too low, and I'm going to mark it, you notice they say high volume node. This is something you can do subject to the other software you use. You can, these are called cloud nodes, and I'm actually exporting levels off of my other software. It gives me all of these. They all update automatically, as well as these high volume nodes. And I can, and it will actually, so these are separate. It's called a cloud node. And, you know, if you need to go to bookmap.com and check the knowledge base on cloud nodes. And then you got to know, you got to find out if you can, in your current software, your higher time frame software, if it can export CSV files. And then you can actually export it out into your Bookmap, which is amazing. Because I used to do all this manual. Anyway, resistance. And then also right there, resistance. I got to, because this is a high volume area. So right there is other resistance. And that's a variable high volume node. I didn't put it in. Getting lazy. Okay, so let's look. So too low, come across, take the stops out here, and this here is resistance because this is where the sellers came in. The other thing we know, and you always got to remember this, and this is why the opening trade is very aggressive and you got to know your stuff. This is the opening swing high. What's above the opening swing high? Stops. So I have, what do I have? What do I have? Overnight volume point of control somewhere. I think it's here, right? I believe so. I think this is the overnight volume point of control. Yes. And this is our target. Remember, 80 whatever 2% probability. So over here are buy stops. Now let's watch. If you're in TraderLab, you would know this. Now, whether or not you would keep it together and be able to sort this out, that's what trade plan is. In the TraderLab, the traders have plans. They're not going, what now? You would know what this means because you're in TraderLab. If you're a trader without a plan or understanding how the market works, you would maybe be thinking it's going lower. By the way, it could go lower. It's not the point. But here's what we know. It's the language of the market. I don't use any indicators. So what am I using? I'm using order flow. I'm using Bookmap. I'm looking at the delta. I'm seeing there's sellers here and they're stuck right here. This is absorption. You can't see that in a candle. What are you going to see in a candle? I don't know. Will you know these guys are stuck here? Will you know that right here there was sellers and liquidity right here? Would you know that we had icebergs up here selling and we had this liquidity in the book? Would you know this was too high? Would you know the buyers took control here and the sellers took a shot on goal right here? Selling iceberg. What would you know? Would you know this is too low? And if we can't get through it, the possibility then is to come back here. But because the opening swing is here, it's get the steamroller out. Notice the behavior here. I want you to see this. Look at the reaction right here. Do you know why that's a reaction? Because if you're in the TraderLab, you know what this says, the language of the market. This says too low. What was too high? Here. What would I do in TraderLab? Two possibilities. Long, scale, and because it's the opening swing high, not to worry, but subject to plan. This would be a scale here. Stop stays under here. And now you're going for that. This, not that one, this one. Next target, or this over here actually is the next target. Let's watch it. There's your target. By the way, pull back here. What is this? You're going to like this. Remember this? VWAP to VPOC, no range. Let's turn the ship around. What do we get? VWAP to VPOC, no range. What do we have though? Target. Might you take this if you know? I'm not saying you should. I'm just giving you mechanics. This is the short auction process. This is a long auction process. Notice the range. Too tight. Notice the range. Too tight. Notice the way the market works. This is too low at the moment. And our target is 82%-ish up here and more. Let's look. Target. Let's watch. Now what? Why did we go down, you ask? Auction. Now I get a little enthusiastic. Why? This was too high in the ETH. It's our retail price. Let's use some logic together. If this was too high and this is too low, might we come back and check the price in the ETH that was too high? Why? Because in the TraderLab, there's an 83% probability, past performance not indicative of future results, we're going to get here. So using the auction as a chassis and structured trades. So you have a short, which I couldn't take. You have a long. You have, by the way, a short here that is not qualified. And this looks like, and if it comes back above here, it squeezes here. It comes back to here. There's your scale. Then you're going for this. It pulls back here. VWAP to VPOC, structured trade not qualified. Pulls back again. You be sitting long here. Subject to what you do, you could or could not, subject to being vetted, to add here or take a long here. This is your resistance here because we reversed off of here, going for this. By the way, I see we just got our next target which was our targets for the day, not the end. There's more up on top if we get through the current target, which was 44, whatever, 50, 75. Okay. Anyway, that's real time. That's what's currently happening. So what do? Let's look some more. So this is a primary trade. You guys got that so far? Do you have any questions? How are we doing? The delta. Yeah, Richard's asking me about the green and red circles. The green and red is delta, exactly, Richard. And with the stop and iceberg detector, here's something that's really good. This is something I use. And you know what it is? It's a confluence of things. I think a lot of developing traders who aren't familiar with order flow tools are confused by what they think this is about. This is not a, plug and play, buy this, sell that, red light, green light. And this is not, I'm going to answer your question, Richard. It's a great question. But I want to point something out. It's about the tools and the interpretation and then using what speaks to you. Okay. Remember, the market's language. This is the overnight volume point of control. It's my high probability target for the long coming out of here. And remember, nobody knows. It's like, keep going because I got targets. Remember, as I pointed out at the top of the stream, our higher time frame targets are around 44, 75-ish, 50 settlement and the naked volume point of control. Remember, too high, too low. Well, the last retail price yesterday was around 44.50. That's our target. Anyway, neither here nor there. So this is the retail price from the ETH. Same behavior, fractal. Now, look, and answer your question, Richard. This is delta. Now, delta is made up of buyers, those who are crossing over. That shows up as delta, so the aggressors. Now, the thing with delta is the aggressors are buyers and buy stops. The stops become market orders. So you have to know it's not a complete picture. So let's look a little further. If I have a target, which currently is covered up somewhere, right under DVAH, this right here was the target, okay, for the long. You can see that worked pretty good. Now let's look at the delta. The delta, but when I zoom in and out, it aggregates. So if I come in real tight, I'm not going to see as much as when I zoom out. So part of having this tool is to be able to really get into the minutia. I mean, I can get out to, wherever you want to go. And milliseconds. Not so much for me. I don't need that. I just want to see the behavior, and I can read it right here. So I'm coming up to my level. This is the key, and there it is right there. That's my target. So you see the target. Now, there's no precision in trading. It's horseshoes and hand grenades. You get near it. So I'm coming up to my target, and I always exit ahead of the target. I call it leaving some for the sweeper. Why? Because it's retail price and it might be too high. The market doesn't have to come here. It can come near it. It can go through it. I mean, that's part of the randomness. Remember, casinos, what do they know? Maybe. That's what we know. Maybe. But here's where I'm looking at it and I'm seeing the following. Buy stops, seller. This is sell delta. I see liquidity in the book. I have liquidity stacking up here. So I know, and I don't know what these guys are going to do. When it comes to order flow, who knows? That's the thing about red and green, like the idea, do I get short? No, that's not the reason to do anything. It could be spoofing. You don't know what it is. So in and of itself, liquidity is always a suspect. However, resting liquid, and see how this is added? This is algorithmic behavior. And let me tell you, and I don't want to get off. There's too many topics for me to do in the limited time I have. This coming into the book and lowering is an algo. That skews the order book and potentially, and I always want to say potentially because we don't know, can put pressure on the book. So I see this. I have my location. Now I'm still answering your question, Richard. And here's my buyers. So I've got buyers here, 66 buy stops. Now I have buyers here. But what do I see here? Only 8 buy stops. 8. If the market's going higher and I'm at a location, I've got this, and I've only got 8 buy stops. Who are the buyers? If I don't get initiative buyers, more delta above this, then what are we going up on? Stops. What's here? Buyers. So I got buyers in here. One. What do I have here? So my sellers are here. They are currently under the bus. My buyers are on top. They're looking good. Looking good, Lewis. I got stop divergence. Antenna is very high alert. Now I'm going to take you to microstructure. By the way, Richard, did I answer your question on the bubbles, which is delta? And if you have other questions, please post them. If you're in YouTube, there's a hair of a delay. Please give a thumb up if you're getting something out of this. Let me show you the microstructure for a short. This is a micro high volume node. It is the same as this, but in a shorter time frame or fractal. I'm going to show you how it works. So much to do, so little time. Let me show you this. This is how you might trade in a fractal. Now, what this white line is representing, let me just show you what this is. So I got chop, chop. This is a consolidation, and I'm at a location. Remember, you're going to see stuff all over the place. Doesn't mean anything, at least to me, because I need to know why it's important. Not that it's just noise in the middle of traffic, right? Because we get consolidation, like here's one right here. What am I going to do with that? I'm not interested in that. I'm interested in this. I'm interested in the exhaustion. I'm interested in the skew of the book. See how I'm using Bookmap? I'm interested in the location. And right here in a fractal, I think of these, if you think of the market or the auction, which is what creates valuation, which is the only reason we got this market or any market, is what's it worth? I don't know. Well, that's why it's trying to figure it out. That's why it auctions. What's too high, what's too low. And the thing about the market is it's changing all the time because it's auctioning. So it's an ongoing thing. So I know this is too high in the ETH. Now let's look at the structure for a short. So a couple things can happen here. If this is too high at the moment, because we come back and check retail, I'm not paying that. Remember, we had left it earlier. So what's our nature? To come back and check. And it will either blow through it and go to our targets above, which is around, remember, 44, 45, or this is too high at the moment and we'll come back here. So let's look at the trigger. This is your high volume right here. So chop, chop, chop is a fractal. I have my exhaustion and I don't know. Here's my seller. Change. These guys were absorbed. Here's the high volume in the structure. This is the consolidation. We break out of this volume. This is language. It is saying that at the moment is too high. That where the white line is and this node is too high. So I have confluence in two different time frames, and this is the outside edge of this. I break, my sellers take over, I come back, and I test here. This sets up a short. Your stop is there. You are going here and here. And let me show you where else. You'll find this interesting. What was too low? Here. Target. So I have short to there, to there, and what's below me? Yesterday's low. Now you could be done with the trade here, or subject to your plan, short to there. This is all a function of trade plan. Now let's watch. Now you're going to find this interesting. Remember what I showed you at the beginning of the stream, higher time frame chart. Target there. Right there. Trade's over. Or you're managing the trade. So that's a short from there to there. TraderLab. Now, the other part, and this gets interesting, is getting long. Really? Really? Are we going to get long? Yeah, we are. Watch. So here we come down and we hit our target. Now, nobody knows. I mean, I wish I did. By the way, I'm going to look up and see if there's questions. I can't always see the chat when I'm doing this because they're on different monitors and they're not right all stacked in front of me. So I'm going to stop and then we'll talk about getting along. Any questions, guys? How we doing? Dennis, the market did not make a new all-time high pre-market. If you're talking today, are you talking about yesterday? If you're talking about yesterday, we rejected it. And what are you asking? Are we going to retest it? Well, Dennis, theoretically, if we don't fall out the bottom of this 20 area, then what we've done is we've gotten shorts and we've blown out the longs. If the longs are out, then the shorts are on the hook and they become the buyers to take us higher. It's kind of the way the market tends to work. Whether or not we'll take out that ETH highs, I have no clue. I can't. I don't know. I just trade kind of the auction. And I trade as a day trader. I trade inside structures, but I know it's there, and I know if I come out above the all-time high RTH, then we have a shot to get back and test it. If we don't do that, then maybe not. And again, it's not my job there's no statistic on that. Only if we have a top. If that's a top, and then we break down below this. Then 5505 is the next target below. I think it might be on here. Yeah, this. So if we take this out, this is next on the hit parade. You'll notice there's resting liquidity sitting in the book. Just saying. It's not coincidental. Just happens to be what it is. But today's play is to come back and get here. So I'm just saying. And this is the target right here. I see we got it. So that's our target. And again, it can keep going. And that is not the all-time high. That is I don't think. That's a previous all-time high. Yeah, yesterday's high. So what do I got up here? Not much. I have to go. This isn't current. This is my streaming computer. It's not my trading computer. Hold on, guys. Questions, and then I'll get into the longs. And once this happened, now there's subject to time frame in TraderLab. There's a couple ways you can do this. You can just go long and forget the shorts, or you trading two sides because that's your trade plan. The thing about trade plan is fractals. And then what's fractals? Time frames. There are some traders that are going to go long, short, and ride the rotations. It's like surfing. And then there's other traders that are going to look to get positioned because they're trading the statistics and they don't want the activity. What they want is the range. Dollars are made in the range. So as you compress range, you have to be more accurate. Your entries must be better. And what I found, and this is something you'll find over time when you vet trade plans, my risk is not any different to go from here to here than it is to go from here all the way up to 45. You see? So that's an interesting thought, isn't it? That's why you have to do metrics. Let's look here. So we're looking for a long. Now right here, clueless, but let's look. Let's just look a little further. I'm going to take you back here. Liquidity in the book, they pull. Right here, we get 118 buying icebergs. We're right at our location. Who knows? Book sweep. This is like everybody gets thrown under the bus. Sell stops coming out, about 400 stops coming out right in this area. Buy icebergs on the way down. Now, nobody knows. Absorption here. This is the absorption. So right here, this liquidity, this is the iceberg executing here. So I know I have an iceberg buying, and that doesn't mean it won't go lower. Remember, I see right here a seller. So I have a buyer and selling. That's a battle. And right here, the sellers lose. I come up, I see buyer. Here I see a seller. What happened here? Absorption. So right here, I know these guys are on the hook. I don't know if we're going to come back and take them out. So I don't want you to think I know anything because I know I don't know. Write that down. In the casino business, they know they don't know. So what can I anticipate? Two things. If I get a counter rotation, I can anticipate sellers at the mid. Why? Retail trader behavior. Now, they may be right. So if I got long anywhere in here, I have to scale here. Why? We might get short and fall, get through here, and do the Acapulco cliff dive and get to 55.05. That's just a trade. But if you get long, you got to scale here, and then you're holding. Or you anticipate the counter rotation. This is all TraderLab trading I'm talking about. And then, because there's mechanical sellers, and it doesn't mean they're going to be wrong. That's the beauty of this whole thing. Who knows? I don't. So sellers are trapped here. Let's look. Let's get into microstructure. I'm going to take you down into a fractal. You might find this interesting. So let's come down into the microstructure. Now, nobody knows, right? This doesn't mean anything. What means something is this, because that was my target before the market opened. And just because mine doesn't mean anything, it is the market's target because of what it represents. Right here, I have volume, I have delta, I have sellers stuck here, I have a buyer there. That's where the iceberg executed, and more sellers in here, and they got stuffed. These sellers here, see the delta? Just another way, I can see it here, and I can see it here. They're stuck. So I know this seller is stuck, and I got buyers above here. Buyers, buyers, buyers. And now what do I got here? I'm running out of gas. Buyers, absorption. Keep watching. Mid, buyers. So let's look down here. What do I hear? Micro high volume structure, low volume. So this is a support area right here. There's high volume. Remember when I showed you the short off the overnight volume point of control? This is the reverse situation, except this is low volume, outside edge. What I showed you at the overnight volume point of control was high volume. Low volume is outside edges of distributions. It looks something like that. But what I showed you at the top of the stream, and remember, you guys can all review this stream if you're in the Bookmap Discord TraderLab. It's exclusively for TraderLab participants, and there's no cost to be part of the TraderLab community, so it's open to everybody. This is an outside edge of a consolidation. Well, if this is an outside edge of a consolidation, this is the same thing in a higher time frame. Outside edge. The market tends to come through them because they're poorly auctioned, and if we exhaust, we can come back towards high volume. So this is the same thing. If we come out and exhaust, we can come back towards high volume. So when we come up, we are hitting the mid, and there's automatic sellers. Sell the mid, sell the mid. And who says they're right or wrong? I don't know. So here is where my buyers are. This is my outside edge of this distribution. That's what this is, a distribution of volume. Too low. Rejection. Too low. Let's just see the behavior. So I know here, possibly, I'm looking for a long. This is the mid, remember. Okay, watch. Watch where we come. Where's our high volume? It is here, right? You do remember. Let's look. Follow the yellow brick road. Now, when something like this, now I can't get long, right? Now I have what? Liquidity in the book. Icebergs bought here. The sellers got stuck, and it's here. Here's the high volume there. Everything is on autopilot now. Now I'm looking. This is an area to consider a long, or these guys are right. They're having a great time, and it's going to fall out the bottom. Let's watch. Now I have a trigger in the TraderLab, and you can all download all this stuff. That's part of those PDFs. This here is my volume. It is there. I'm spending time in minutia land. I hope you're getting something out of this. And this is the outside edge, low volume. Same as that, micro and fractal. Okay, so this is the outside edge. Here's the volume. Sellers are trapped. Liquidity here. So I had, this is how order flow can help you. Now you see how you might use Bookmap. Now this is in the book. It is supporting this guy. It might be the same player, please. And it skews the book. Now I have my sellers in this leg, and who knows? There's no way to know. In fact, right here, I can't buy it because my teeth are chattering. I know it's support. What happens? Here's my volume. Here's my break. I now have a trigger. Now I get my retracement. This is resistance, high volume, and this is micro, high volume. Outside edge, right here, long, stop under here. VPOC migration. This is a problem. Let me show you this. Either we bounce this way or we come back the other way. If I bounce up, then it also reinforces the long and the potential squeeze. See this? So what do we know here? Too low, long, problem right here, pullback, teeth chattering. This is support. What do I see here? Long. Once I'm over here, then the squeeze is on. Wasn't there some song? The squeeze is on, right? Now, let's come back. Sorry about that. Variable high volume node. What's this? Variable high volume node. Let us mark it. Why? Too low. We come back there, then what? Something to do with it, maybe. And what was the last place it was too high? Here. Variable high volume node. Too low. Now this is too high. Let's label it. This is auction. So what I do, and it's not a recommendation, just give you a sense, and you can learn all of this. It takes time, by the way, and that's what the TraderLab community is about. When I showed you the chat earlier, you saw all the posts, all the screenshots, all the conversation and interaction. We all learn from each other. One thing about this business, and I've been doing this going on 45 years, there's still a lot to learn. But if you don't understand how the market works, you might be at a disadvantage. So if you get long here, this is your scale. Watch. And where do we come? Interesting. Where was that high volume? Here. Where do we come? Here. Watch. You see it? So what happens? We come back to high volume right here. Actually, it was here. This is your resistance. Pull back here. Now, what do we know about this? This is too low over here. This is retail. Now, this is a hard place to, I saw this one here. Now, I try to get the broader stroke because I just don't like that. If I get too active, it just doesn't work as well for me because I trade when you understand the market, how it works, and understand also the random nature of it. This is why this could be a target, you see. So you could be done with the trade here. Doesn't matter. The target, don't forget, is this, right? And we have a target above, and this is all before the market opened if you follow the top of the stream, right? 70% probability. So this was the target for the longs and then done, right? So now there's more. Let me see what else I got here for you. I do have something else. Any questions while we're waiting on this thing to ferment? Guys, where's the IB high? 930. There's a statistical, oh, it's right here. There's a statistical probability of, and again, past performance, not indicative of future results, about a 69% probability we're going to take out the first hour's high. This, let me show it to you. And why is this important? If I have all these statistics, I am not shorting now. I'm only using counter rotations to get long, which is the reason I got long down at towards the low of the day. So I have statistics that say there's almost a 70% probability of taking that out, IB high. So if this is resistance, okay? It's not 9:30 yet, so it's first hour. So I know once I take out the first half hour's high, it increases the probability of taking this out. And I have a 70% probability, I know it'll make you nutty, to go here. So if I know that, I am looking for longs to take this out to get to that. And then my day is pretty much in park unless I want to sell this and come back to here and to here, and that's counter trend. Oxygen on my side, and you could see the behavior. This was the target. Now, it was a counter trend trade. If you shorted, which you could, this is your target. This is called mean reversion. It is trading in fractals. Do you want to trade counter trend? Whatever. The market's in balance. So the way this tends to work is the market finds goes outside, wherever it is, gets the shorts in on the other side, squeezes the you-know-what out of them. Then we come up first to here, overnight VPOC, and then we sell off. Then we come above this. What's the next retail price? This. If it's too high, what is the nature of the market? Let's come back and check this, but this is the current auction here. What else do we know? Where's the stops? It's this leg. Now, so the market goes up to go down. The market goes down to go up. The market goes up to go down. You see? So this is the target if you took a short from here, and this is a TraderLab short, which may or may not be appropriate for you based on your trade plan. By the way, the first target for the short is here. This, right above this, right ahead of this liquidity. So this would be your scale, and then this is your next target, and then maybe here or maybe not. It's just the way it is. Any questions? Now, this is the same trade as the short from here. It's the same trade as the long back to there. It's the same trade as the short back to here. And if you clear this, the trade is back to there. And these are structured trades, not a recommendation. And of course, whatever happens, happens. This is part of the joy. Because remember, now let's look at the structured trade. I'm going to take you into minutia land again. Microstructure. Are you interested in microstructure to see triggers? Is that a yes? Or do you want me to go somewhere different direction? Let me know. Thumb up in YouTube, guys, if you're getting something out of this. Thumbs are good. I do appreciate a thumb because it helps the channel, helps the stream. And remember, the TraderLab is an open community for all traders. There's no cost to be part of the Bookmap Discord TraderLab community. I stream every day, plus there's ongoing support, posts and audio snippets during the trading session from time to time on an ad hoc basis. We are currently talking about a counter trend trade, not a recommendation. It's a short from the 44 level area. You can see the structure. I guess I'll show you the structure so you can kind of see it. Here's your micro high volume. And this was the target, remember, coming up. So target, who knows, right? Could go to the moon, right? This is part of the joy. Buyers are trapped here, and I have alignment. So settlement's also a target. So this is settlement and this. These are statistically high probability targets. And I trade the targets. I don't worry about where it's going because I have no control anyway. So if except we're in a random environment like the casinos are, then it's statistics. The gaming business is built on statistics. It's not built on prediction. You can't predict in a random environment. So if you know you can't predict, then our job as traders is not to try to predict, but to work with statistics, because it isn't one interaction that determines the outcome. It's a sample size. Casinos, when they play blackjack, they don't know the cards coming out of the deck, or how the gamblers play the cards. They just know over time they extract dollars by just playing the game exactly the same way. If 5 gamblers walk out with suitcases of cash, they don't have a new blackjack game. They don't change it. They don't skip the next hand. The things we do, they don't do. And they're successful. They pay the gamblers. They pay for the cocktails. They give you the ticket to the buffet and maybe a dill. And they make tremendous profits, right? Why? Well, can we emulate a successful business model? Very hard for us because we have attachment to the outcome psychologically. This will take you out of the business. I believe if you come to TraderLab and do the work, and yes, it's work, and you're interested in building a business, longevity, and if you do the work, and you have to do the work, when you have statistics, it gives you something tangible to operate in randomness. Your goal is no longer to predict and curve fit everything to try to get certainty to satisfy your need to avoid the pain, which is your primal wiring. Don't grab the saber-toothed tiger by the tail, run out of the burning building. We have to run into the burning building and grab the saber-toothed tiger by the tail. And our instinct and our primal wiring cannot differentiate between the intention of putting a trade on and the fear, and it just behaves the same way, and it causes us to act like lunatics and not in our own self-interest. When you have a statistic, and this is the work part of trading, now you can open up your trade plan and know that if you short this, what is the probability of getting here before getting a stop, or at least getting a 3-point scale subject to your plan? And since it's counter trend, you have to decide. Now, the thing that is, of course, part of the, as they say, the fly in the ointment, is this was our target downside. We got it. So we might only rotate. So counter trend trading is possible, and you just got to know what you're doing. It's counter trend. Your choice is you're done here, and now you go order lunch. Or if you're still trading, you understand it's counter trend. You know there's stops here, and you know if you get under here, this is your target. If not, you may take a stop here, or you have to get risk neutral. This is all about the individual trade plan. So where are we? Let's look at the short. So this is micro high volume, right there. These guys get trapped. Now, why am I would be looking here? It's location. The auction is very much like real estate. You've heard the term location, 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 location. Retail price from yesterday. If this is too high, and it might not be too high, we might just check it and then come down and see what might be too low. We don't know. Could be this, could be this. What I do know is there's stops here. And I know currently this is the retail price. Now, we don't have to do anything. This is part of the joy. But let's go look at the microstructure. Here's high volume. Notice the change in behavior. There's my seller. So you'll notice up. Where's my seller? Well, I got one little guy here. He's absorbed. New highs. I come up here. Now, this is important. Notice the liquidity in the book. Now, order flow. Selling iceberg. And this is absorption. This is the buyer being absorbed by the sellers. My buyers try again. I come up. I have another selling iceberg. This is resistance. Now, there's no precision in this thing. So if I can come over this and then come under it, that would set up, and this is in the PDFs, a potential short in the TraderLab. Not saying it is. I'm saying it's just something you can study. Here's my micro high volume. Seller. Now, this looks the same as this. This is different, deeper. This now is too high. Let's look at the structure. Absorption. Potential short location, not a recommendation. Let's watch. TraderLab. So, and where you're trying to go. This is not a trade recommendation. You're trying to go here. Why would you go here? You're asking me. Okay, I'll tell you. And again, it's not a recommendation because I'm clueless. This has stops under it. First hour high. So potentially here. And you have the overnight volume point of control. And you have this high volume. And high volume, that is resistance, becomes support. You heard that thing. Resistance becomes support. Resistance, which is here. So we got support and we got resistance. Interesting concept for this astute group of traders. Let's put a line. Let's see how you might read the auction. The volume is here, pretty much right here. See it? So I have this, I have this. I pop above, which is typical or not often, let's just say can happen. And then if there's nothing above here, I get my seller. Now I've got my volume, I've got my failure under here. There's my short. Now you're going for this and that. Let's see it. Questions now. I can come up again for oxygen. Not a trade recommendation, guys. This is TraderLab. The heat is on. Is that what it is? Jose, did I answer about the numbers next to the dots? Jose, I think I did. Buy stops, sell stops, buy icebergs, sell icebergs. That's what's here. Sweeps. This is a sweep. Nice to know. And so let's look at the microstructure. Let's come back to micro world. So that's your short. What is this? Volume. Seller. What's too high? Volume. Here. Too high. Right there. Now I'm taking you down to an area that's more advanced. Remember, fractals are multiple time frames and they trade inside of each other. I always think of them as something, a Russian doll. It's a visualization of a vertical time frame and how the market operates. In the big doll, it's up. In the intermediate time frame, which is I kind of call the big doll, this was the outside edge for the big doll. I'm trading inside it. So longs, but I can trade the rotations in different fractals. So I can be long in a higher time frame structure. I can also look at the shorter time frame and trade what's called mean reversion. So what is confusing, of course, is what is your time frame that you trade. So in the TraderLab, you could just be long to here, which is what the last trade was. There are trades inside of this because we're in a Russian doll to here. If this is too high, and it might only be too high temporarily, we can rotate off it, this short, and come back here, which is what this trade is. If I get here and under it, then I have this. And maybe even deeper, but this is the primary target, this. And why would we come back here? Let's look at the logic. This is retail from yesterday. I'm not paying that, and we left. Now we found too low. Now we come back up. Is this now too high? Well, let's come back maybe and check today's price. Is that still too low? You see, that's the logic. Now, I don't know if it'll do it. Not my job to know because I can't. And this is counter trend. However, and now I'm going to really spin your brain a little bit. When you trade in multiple time frames, it's structured trades inside of structured trades. If you're in a different time frame, you are trading different plans inside of plans. And this can be very confusing. I'm going to try to explain. When you are outside a retail price and you come back to it, it's called mean reversion from the outside. If that price is too high, we can then mean revert to this price. Same concept, different direction. When we come outside, we can mean revert back to this, and we can mean revert higher in a higher time frame. So I can be doing outside to here, and then in a shorter time frame, short from here to here. So it's outside to here is mean reversion. Here back to this time frame is mean reversion. Hope that well, it is confusing. This is why you have to know your fractal or what time frame you're trading. And you could trade them all inside of each other once you understand market mechanics. This is how the market works. Now remember, we don't know what's going to happen. So if I have a short on, here or from here, which is the short, then I need to get risk neutral. And if it comes back over here, it's not the end of the planet. It just means I'm going to push potentially to my next target. Where did it go? I don't have it up here. Hold on a second. Hold on one second, guys. I gotta get this target for you. Maybe. Where is it? 1 second. 55, 54, 50. This is my next target, not a trade recommendation. That is, I just want to get it on the chart, and then I'll show you what this is all about. Maybe it'll make some sense. Why? Got to change this up a little bit. I'd have to put these in manually. They're not automatic. Wow. I'm going to get old by the time I get this done. Okay. Microcomposite volume point of control. Let's go back. And that all-time high is not correct, okay? This is the outside edge of a larger distribution. Think of the big Russian doll. Too low. Where's all the volume in the current consolidation? Here. So in a fractal, I'm going outside back to there. In the developing time frame, I went from that outside edge to the next target, which was there. If I get through this, which who knows, then my goal is that. And it doesn't have to do it now, ever, or never. Now, and that's in one fractal or one time frame. Alan, are you following all this? Then, so I'm coming from here to here. And then from there, mean reversion back to there. The long from here is also mean reversion up to there. Can you see the multiple time frame aspect of this? I know, and your head is starting to spin. You can unspin yourself if you come to TraderLab. And yes, there's conflict in our minds. So the trade plan is predicated on the work you do outside of trading hours. If you have a plan, you already know what can happen. You don't know what will happen. That's why the long was to here, and in the more developing time frame, this is too high, we come back and check this. But first, you got to get under here. That's the trade. So this is a short. You'd be risk neutral and you'd have your helmet on. Now, what do you do if it comes back above here? How about this? You look for a place to get long to go there, or nothing. You're done for the day. Target. Next is this. Not a trade recommendation. I hope you guys are getting something out of this. And if you're in YouTube, please give a thumb up. Give the TraderLab a little support. Very helpful, very important. There's no cost for you to visit the TraderLab. And there's a link in the bottom of YouTube if you're interested in understanding market mechanics and building out the business side of trading. This is what TraderLab's about. There's no holy grail. Still looking for, actually, I'm not looking for it. Gave up about 20 years ago, but hey, I'm a slow learner. And no indicators on my part. I don't use indicators. I'm not saying you can't use them. Indicators are really a substitute for understanding how the market works. Indicators are an output of price or a derivative of price, right? So that's fine. However, does my quote indicator tell me I should be getting short there? Am I stopped there? Does my indicator tell me that this is my target and support right here? And that I should be getting scaled ahead of this? Does my indicator tell me, based on how the market works, that this now is possible? And so is this. I don't think my indicator can do that. At least they haven't never done it for me. So I found, again, just personal, it's not a, notice 646 stops came out. Why would we be shorting into this? Because that's where the stops are. Remember, where's the fuel? Market goes to the fuel. There's absorption here. That's why it's a target. Now you're hanging out, and now your trade plan dictates what you do next. Either we get under here and come here and maybe here, it's trade management, or this trade could be done. You could just, is there anything wrong with this short from here to here? But that's your scale if you're in TraderLab. Then it's trade management. So maybe you put your other one break even and you just hang out. Why? This might be too low. This is also the possibility of a long in the TraderLab. This is where it's conflicted because this is a short to here. You clear this, then you got this. This is also a possible long back to here. And if we take it out, then you're doing this. How do you reconcile that? Maybe you can't have it both ways. Maybe you just take it one way. Just say it. Are you guys, is this making sense? See, I can't predict. Not my job. I gave up on that. Magic 8 Ball, when I asked, I said, what should I do here? It says ask again. So what do? Structured trades. Short to there. And it's all on the chart. Just thought I would do that today to help you guys see that there's method in the madness. The method is the randomness. The madness is the randomness. And it messes with us psychologically. Let's accept we're in a random environment. Let's not worry about being right and predicting. We cannot. If you can accept that, it changes your mission. Your mission is no longer to get certainty because it doesn't exist. What exists is randomness. If you now accept randomness, it changes your mission. You're not trying to curve fit your indicators. I call that Trader Groundhog Day. I did a webinar on it. In fact, there's a whole library of webinars on this process available in the Bookmap Discord TraderLab, and you can all access it at no cost, as well as these structured trades. There's 60 PDFs and these statistics. Remember, 70% probability we get here. How about that? Was that useful? And is it useful that this is a short to here for a scale? Is it useful to understand that this is a specific plan in a plan? This is called mean reversion, and the mean is there. We get through here, that's the mean. And then where's the stops? Here. This is called balance. And if we come under here, We can accelerate, and then we have this and possibly out here, doesn't matter. See the outside edge, low volume zone or node out here. So we can come out, we can slosh. So the short is there to there for the scale to here. And I don't call trades. Remember, I'm allergic to that. Why don't I call trades, you're asking? I don't need to impress you. I take stops too. Welcome to trading. No magic. If you understand shopping, you're way ahead of other retail traders who think that this business is made up of buying a software toolbox, throw a bunch of indicators on there and time frames, and now you have an ATM in the basement. Not quite. Now, the thing about indicators, and this is what kept me on not only indicators, but building trading systems and optimization, walk-forward testing. I did it for years because I managed a fair amount of dollars over a lot of asset classes, when I was money manager. And I was always chasing the market in a way because, you go back, you take a chunk of data, optimize it, do walk forward testing. So you might be in a month of data. Now, I was a position trader, trend follower. There was no day trading. I was managing. So that those things, and it was mostly currencies, things that would trend, and I was a swing trader in the big S&Ps back in the day, $500 a point. And it was 2 to 3 day swings. So I first started trading S&Ps in the early 1980s when they first came out. So that fun facts to know and tell. So this is your trade plan. And the thing about your indicator is, remember, the gamblers win and walk out with cash. The problem with indicators, and it's a personal opinion, is they work at times because everything works at times. You could flip a coin and have a winning trade. Here's the problem. When we curve fit, we're trying to make something work and we're looking for certainty. I get it. Been there, done that. Whether you do it with systems or whether you just do it with your eyeball, it's really similar in some ways. And the thing you're going to say is, well, it works sometimes. But if you can't measure the individual setup and whatever the variables are that must be consistent in order to measure, you may have a process that has a losing edge. It works sometimes. They all work sometimes. That's the problem. They may be a guaranteed loss over a sample size. So we continually adjust, tweak, and I call that trader Groundhog Day because we don't have an edge, but we don't understand the business is like the casinos where it's a business of edge. So if you knew that every time X crossed over and the 5 other things you use, that over 30 of these experiences, maybe 10 of them won and 20 lost, you'd be a loser with it. Would you keep doing it? I would suspect not. By the way, this is mean reversion. There's the mean. So the thing is, this trade right here could be done. It is our primary target. It's called mean reversion. Now it either gets under here or not. This is what this is. So if not, you're out. But this was scale. Then it's either leave it at break even, subject to your plan, or as soon as you see this right here, you're out. And you forget it. The trade's over. And it doesn't matter if it comes out the other side. No clue. This is called mean reversion. And this is the mean up here from yesterday. This is today's mean. Too high, where do we go? Let's check, Lewis. We're shopping in the S&P store. Too high, maybe too low. Mean reversion. That's the mean coming up. If too high, let's check the mean in the developing daily time frame. Same thing. Just fractal. Does this make sense? Is it logical, guys? You getting something from this? Yeah, Richard, I don't track the full session. VPOC, I'm aware of it. I trade the current auction. You could do whatever you want to do. You just have to vet it. For me, in the overnight volume point of control, which becomes fixed because it's the end of an auction, and you're going to get new volume and new participants, cash is going to open, stocks are going to open, different. I also do look at the full session VWAP, which is just the average of where the buyers and sellers are based on the volume. This is frozen, it's static, the overnight volume point of control, because the auction ended. So I use that. Same thing with the overnight mid. And then it's a developing volume point of control. New auction, new players, new volume, and cash is open. That's what I do. The thing is, everybody can do their own thing. You may find, and I mean the collective you come to TraderLab, you put elbow grease in and do the work. You may come up with something that the rest of us are not aware of. And then that's why we leverage in the TraderLab. It takes really a community to do the work. There's a lot of work in this. And to uncover new ideas and to find things that other traders are not aware of. Now, I'm going to suggest there's no secret sauce. There's no holy grail. There's no secrets. We are competing against the best minds on the planet. I've worked with these guys at hedge funds, quants, PhDs in math, physicists. These guys are rocket. They can put a rocket. They could land something on Mars if that was their job. Their job is to take dollars from other participants here in the market. We cannot compete with them. We are competing primarily with other retail traders. And when we get big moves by the bigger players, we want to catch a ride on the back of the elephant. We are like fleas on the back of an elephant. And if you think anything else, you don't understand who the participants are in the market. We probably make up about 20% of the volume, give or take. And that's just a guesstimate, okay? So we are trading against other traders. And they win at times, of course, because everybody wins sometimes. But they don't have an edge and they don't understand how the market works because they're stuck on plug-and-play indicators thinking this is just like install a new piece of software and now you have an ATM in the basement. It's naive. Imagine when you open up any commercial software product. That's your higher time frame. There's maybe 100 indicators in there. Have you ever wondered why there's 100? Is it so you spend the rest of your life mixing and matching, looking for the right mix and then the right time frames and all that? Is that really the facts? I think it just indicates really why they don't work. So it's great for selling software, but what about traders becoming profitable and creating a business and maybe a potential career? I don't think that's a solution, but again, it's just based on my experience, and I'm not saying it's yours. I'm just talking about mine and the other traders in the TraderLab. If you're interested in the TraderLab, here's what the 60 PDFs look like. There's no cost to visit TraderLab. There's a link in the bottom of YouTube. It's a terrific community. You have access to all the resources, statistics, which you have to vet for yourself, structured trades, that I've shown many times here in the stream. You can access those, download them, visit the TraderLab, say hi. It's a community. You will get help. You get questions answered. Bring what you're doing now. Let's shake it down. Let's see what works, and let's see if there's something that doesn't work. Let's see if you can make your process better, and then see what we have. Maybe you can add some ideas for your trading and maybe add some to ours. That is what the TraderLab is about. There's no cost. Give a thumb up in YouTube if you get value from this stream. It gives me motivation to continue doing it. You don't have to subscribe. I'm not a vendor. There's no course, no nothing. Just a group of traders and a lot of additional education that you can take advantage of. Stocks, options, crypto, a high-tier order flow tool like Bookmap, of course, the TraderLab, the community, all the resources, the library of webinars, and the other education and streamers. that you can access in the Bookmap Discord TraderLab chat. And by the way, if you have Bookmap, remember there's the Bookmap Academy where you can get mentoring and coaching on structured trades, structuring trades, and order flow. Take advantage of that, guys. Thanks again. Please give a thumb up. And remember, if you're in the Bookmap Discord TraderLab community, these streams are available exclusively to you. Reverse engineer, screenshots, circle arrows, and the rest of it. Thanks so much for your support. Please give a thumb up. Look forward to seeing you next week. And thanks, guys, for visiting the TraderLab today.